Hello, everyone. It's 8 a.m. Chicago time, 9 a.m. Eastern on Tuesday, the 24th of October, 2017. Thanks for continuing to join this broadcast. Thanks for being here. This is another Trader Bite where we'll go over what the market has done and set up a game plan and some scenarios for the day to hopefully get an opportunity to um, push that plan into and turn it into some profits and sometimes some losses. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, pretty much all indices across the board are positive from yesterday's close. Across several markets, yesterday's closes were at the lows, so no big feat there. The S&P is trading in value in range at 2567 or 75 or 2568. It closed yesterday around 2563.50, which is, I'll cover this, which is the mid of the gap from Friday. From Friday, right smack dab in the middle of the gap and the point of control. Just you may have noticed that on days where we get some selling, the market structure is much better. The market tends to, we get an auction that is more natural. The market tends to follow what I have learned to be a more reasonable rotation structure, and this makes it easier to trade. This is why, although I'm not a bear, a perma bear, this is why my preference right now is for selling days, which are very, very, very rare. Uh, but selling days mean that we're likely to base and then continue higher as we've done over the last 2 years or so. So just be careful today with your short bias. I know a lot of people like to see the action and they like it to continue, so they push for that. Trade what you see, not what you want. Okay. As far as what's on deck for today, there's a lot of chatter, continuing chatter about the U.S. tax plan. Yesterday, the S&P 500 extended its streak without a 3% drawdown to 242 days, breaking a record set in 1996. The 10-year is at its highest level since May. The yield went up 3 basis points to 2.4. And as far as, and of course, I'm sure you guys heard that Japan re-elected Prime Minister Abe. That's going to be seen as stable for the markets. This morning we have U.S. manufacturing PMI at 945, expecting 53.5 for October. This is the prelim number. Also at the same time we have U.S. services PMI expecting 55.2, and then we get Richmond Fed at 10. Richmond Fed is a low tier number. As far as speakers, not seeing anything that's coming up other than ECB speaker like Cannon at 10 Eastern, and then after the market, AT&T announces its earnings. Let's switch gears and look at what we expected yesterday. So yesterday, as I discussed at great length, that I was looking for the market to be responsive mainly. Mainly, I was looking for it to rotate down. That's the main push. The market was gapping up, and I was looking for supply to come in and push it lower. The expectation is it would push through the point of control, test the point of control early, push through to the LVN right here. The LVN being around 25.70 or so. And that's the primary expectation. We did get selling yesterday, and that did work out. The secondary scenario was for it to test down like it often does, as it did here or here, to test down into the gap and then get a big rotation up and then hold steady giving us a doji by the end of the day for RTH only. And so that did not happen. On the Russell, the expectation was for a sideways open, an attempt higher, and then a push, a strong push down. The goal yesterday is to get to 1507 at least. The extended target would have been 1503. And then the further target down, which I didn't post online, I posted in the chat room, and we pushed through by a few ticks, was way down at 1498.4, I believe. And that's basically what happened. So we got both primary scenarios playing out. Secondary scenario is that it pushes down to the point of control, finds a base, and then holds tight in range of Friday. That did not happen. Okay, this is what we got in the S&P. Here's what it looked like. Let's clean this up a bit. We got immediate selling, this dark bar, immediate selling to the point of control, to the prior day's point of control, which was at 2573 and a quarter. Bounced back up and then failed to hold, and so we're looking for it to test the LVN, which it did eventually. It stopped just short of it by a tick or so, 2570 and a quarter versus 2570 right here. Just held sideways, and then we finally get the drop. Once we push into the prior day's point of control, generally, if we're coming from above, generally we will likely test the value area low, even though this is a double distribution profile. We're likely to test the other side. If we're coming in from below and we push to the point of control, high probability of test of the high value, the value high of that profile. Yesterday, it pushed all the way through. We had a bit of a trend profile. If I extend the IB to double IB, you can see that the double the IB was at 2567 and a quarter, and it exceeded that. It closed at the low, closed at the bottom quarter of the profile. This qualifies as a trend day type, which are rare to the downside these days. And so that's where the S&P is, because we turned it turned on itself yesterday. We actually, the gap low was here, so I think it was removed here prematurely. The 1020 gap low actually should stay on here. It was not tested during the day. It needs to stay on here. You'll notice that the low of the overnight session of 2561.50 is the low of the gap to the tick. You'll notice that the point of control of 2563.50 is the gap mid, which is also the point of control, and that's basically where the market held its point of control and essentially accepted this gap zone as its balance, or as its most valuable price. Because it's turning over on itself, we build a profile on this area to see what is below, what is above, what is it trying to do. And we could see that a lot of the value is still higher. The lower profile is not providing very much in terms of volume. But we're likely to start turning back up, and this gives us that 2573 target above. 2573 is the MC point of control. Because the lower profile is not giving us much in terms of what we would consider to be useful information or useful value, we move the profile forward, and then we start to see what areas we might get tangled with. And you can see right now that the market's tangled with a triple distribution profile, right? These are three distributions right here, right? So to draw it cleanly, you have this, you have a much higher distribution up top, and you have a distribution that's very sharp down below, and we are smack dab in the middle of this distribution. This means that the high, the overnight high, is right around that distribution, the LVN. This LVN at 69.75 69.75. If I can write, this is a 9, believe it or not. 69.75 becomes key this morning, as well as this price down here at 66. 66 becomes important this morning. Why are these important? Because these are low volume nodes. If the market pushes through, for example, if it opens and it pushes through, generally it'll be confronted initially. If it ultimately pushes through, then that puts the highest price of that distribution in focus, and it becomes a high probability play for that price. If it drops, for example, to 66 and consolidates and then ultimately pushes through, then you're looking for the high volume price of that area with high probability, which in this case is 63.50. So no, it does not predict what the market is going to do. That's not really what this broadcast is about. That's not how I trade. I'm looking for what could happen, and I'm not trying to predict what the market will do, but I'm creating a plan. I hate using the word trying. I'm creating a plan for when it does push a certain area. And if it does, then what's my response to that? What is going to be my reaction? What am I looking for in terms of targets and risk control and things like that? If you've ever seen a war movie, you know that there's a lot of time spent in the briefing room going over plans, going over tactics and a strategy, and then what the soldier or the pilot or the Marine does out there depends on the situation at the time. You assess your risk, you protect yourself, and you take your shots when you can, and you have good odds, right? You don't just stand up and just shoot at everything that moves. You make sure you're shielded, and then you take your shots when you have an advantage. This is basically what trading is. I hate to look at trading as war because it's not, but it is the same thing, and I'm not at all pretending like any veteran here. We're just like the veterans who actually are brave enough to go out there and get shot at. I'm not one of those people, and I respect that, so don't get me wrong. But this is how things are shaking out. We have a triple distribution that we're trading on, 2 days, and we are in the middle of those two distributions, so the composite becomes very important. Your software hopefully can draw this composite and show you not only where the bars are on a 15, 60-minute daily or whatever, but to show you where the trading actually happened within those bars. This is what volume profiling is all about. Very, very powerful when the market's actually behaving or trading back and forth. Not so great when we're making new all-time highs every week. So, and that's what we've been in for a year now. So not fun at all. So that's where we left off yesterday. It's a very long-winded explanation of how I look at things. I like to do that every once in a while just to bring people up to speed who are just joining. This is what has happened overnight. Oh, I'm sorry. The gap zone is still here. I apologize for that. I just turned off the flex levels for clarity. I didn't accuse anyone of doing anything wrong there. So you can see the gap zone. Here's the gap zone. Here's the yesterday's point of control right in that right in the mid of the gap zone, and then the low. The overnight low, ONL, right here is right at the edge of the gap zone, and the market's moving away from that. The gap zone remains there until we test it during the regular trading hours. It does not disappear when we test it overnight. We need to know that the stocks underlying the S&P 500 or whatever product you're trading are supporting that move. And what we've done last night is we pushed through to that gap zone low, which is the high of last Thursday, and then we started to climb up. The overnight inventory is almost 100% long, and the delta is positive. Volume in the overnight is high. There's participation here, 191,000 when lately we've been getting somewhere around 95 to 110,000 in the overnight session. This tells us that the overnight session is busy, that this auction has done a decent job. We have good distribution, good balance. The point of control is in effect here, and the market is recovering. So the initial move this morning is expected to be rebalance. We're inside of the 2-day range. The biggest move is expected to be rebalance open. I'm expecting it to push lower down into 66. I'm looking for support around the 66 area. I'm looking for it to hold. I'm looking for an impulse, consolidate again inside of this high volume node, and then test that 69 area, this LVN here at 69.75. Test that, and then eventually break through. It is Tuesday. Tuesday has some of the highest range historically of the day, and we are likely, or we could very potentially go for the 73 today if the the buy the dip programs step in. This is what we're looking for. That's the basis for the push up, and this is the first scenario. Okay, that's the first game plan. So what am I going to do? I'm going to wait for it to open. I'm going to look for, okay, how is the battle on the open? Which rotations are wider on my trigger chart? And then when I see a rotation that is the market struggling to gain higher prices, then I'm going to look for the second scenario, which is a selling scenario, right? With this, looking for a burst on the open, continuation higher, and then against that 69.75, looking for failure to continue higher. It might poke through, fail, and I'm looking for a bigger push down. I would try to get in this area right here, and I'm looking for a rotation to 66 initially to lay off some risk, and I'm looking for it to break, poke through, and come back in. The market tends to buy dips near the close. It didn't do so yesterday, but it's been tending to buy dips near the close. I'd love for this to be the high for the next couple months of volatility, bringing volatility into the end of the year. I'd love to see that, but it's not likely. I got to go with what the market's been doing until it changes. So this scenario, push higher, fail, and then rotate down. And I know my boundaries are 69, 75, 66 with a potential poke into the 64, 65 area. So I'm looking for some support in this area here. Okay, so that's that. I've eaten up all the time with the S&P, but I want to take a quick look at the Russell, not the Russell trigger. The Russell pretty much played out what was expected yesterday. The Russell does not have any gaps. It has moved immediately away from its prior. What are all these lines here? Okay, so let's get rid of this. Boom. And this guy. Boom. Okay, so it moved immediately out of the prior day's range. Tried to poke back in. A great opportunity for a short here against the prior day's point of control. You could see that the move down was very impulsive. The push back in was fairly weak, and then we finally get this continuation bar down. In my opinion, and risk is always present in derivatives trading, but in my opinion, this is a better product with better opportunities right now, even though it's thinner. During RTH, it is a better product to catch quick rotations in. And so with this, it pushed down into a composite that I had drawn. Just goes back a bit. So this is the next area down that I had mentioned, 1498.6, 1498.6. So that's the cutoff point. Once it pushed through, see, it tested that LVN right there, pushed back up, and once it broke through, I announced that it's likely to push into this point of control right down here. Okay, and it did. It dropped right through, and it ended up pushing by a couple points and retesting before it closed. The point of control remained in line. You can see these points of control here. This pink line is in line with this pink line. That's not an accident. So the Russell, the small caps, continue to be the weaker end of the market. I'm not going to go over the plan today. You could see that we're recovering. This is right in the middle of balance. You could see that there's a profile here that has also 3 distributions up here, here, and here. We've tested the lower distribution. We're in the middle of the upper distribution, and you can create your plans based on that. All right. Good luck and take care. I'll catch you tomorrow.